Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. We're coming to you from snowy, cold, blustery Chicago. Yeah, pretty big storm in the heartland tonight. I guess it's only going to get worse. Well, there's bigger problems out there in the big wide world, that's for sure. But before we get to the charts, I do need to point out that trading futures and forex is a risky endeavor and not suitable for all investors. The charts we're going to be looking at are real-time market snapshots and may not be replicated going forward. First market, we're looking at the the Australian dollar. The Aussie had a nice breakout finally. You broke out of that narrow range. You know, when we were in that range, we were trying to handicap it, and this is a great lesson to learn. The long-term trend was up all the time. You can see by the trend line there. The long-term trend on the daily chart was up. The short-term trend on the monthly was up also. You can see the maroon line. And when prices were caught in there, they were caught in that little range here. I'll put the trend line back on there. And I was saying, you know, there's the possibility you come out of this range on the downside, we get a nice healthy correction, and then the possibility about getting a nice dip to buy. And, you know, that's wishful thinking. Ideally, yeah, we wish we get a nice dip in a bull market to buy, but that's not the case. That wasn't the case, and that's a good lesson for us. But nice breakout now, and I would think you know, you'll resume the upside here in this big bull market overall. So I'm glad to see the breakout, and this is an asset class market. So you know, what a nice day to do it on the first of the month too. The U.S. stock market up very strong off of continued investment flows, so pretty apropos. And I thought we may have said that earlier about the Aussie too, that you know, if they're going to break it, they've got to do it pretty quickly. You got a little window to take it down, because come first of the month, boom, it's up again, and there you go. So next market, your Euro US dollar. There we go. Big up day in the euro. They shifted the daily trend back higher. It looks like they're going to go all the way to 140 here. The key was that the key we were saying all along was that the weekly was up and the monthly was down. So you're kind of range bound in there, and that means you can see big swings either way. And here, the way to approach that would have been a 4-hour chart. And there you can see it clearly when that guy turned up right in there, it was off to the races. So, you know, we talked about that before, big swings either way. You're still overall your counter trend, though, given you're below that maroon line. So next market would be the pound, U.S. dollar. Big up day in the pound. Pound broke out on the upside, too. While we were trying to get a read on this before, let me pull out to a higher time frame chart. When we did the weekly report over the weekend, we were trying to figure that one out. Yeah, I have to turn off that daily line. Well, you got to think whichever way it comes out of there. Well, you know, the crystal ball is just not working like it used to. I think overall, though, you're probably pretty comfortable in this range between, you know, the 09 highs up around 170 and then 145 or so on the downside. That's just my guess looking at it. From a more short-term look, you know, it looks like the November highs are in the cards. Bully on the pound. Dollar CAD next. Okay, there you go. Market couldn't hold above par. Fished around up there, and bam, it resumed its long-term path of least resistance there, as it got nailed back down in the back in line with that long-term trend on this chart, which is down. With that short-term trend on the monthly, as you can see, is down. The daily shifted down also. Next market, the Swissy. Dollar Swissy going for the lows there. We'll see if that's the all-time low right there. Well, I'm sorry, that's actually the January low. We'll see if the Jan low holds, and the all-time low is just below there. So, they could continue to chip away, make a lower low. It doesn't matter if regardless of what your momentum indicator here is telling you, price is telling you it wants to ease lower. So it looks like you're going to continue to chip out that potential long-term bottom we keep talking about, and that will wear a trader out. Trying to play that. That's essentially a downtrend, but you have to trade it like it's a counter trend when you get so close to those lows. Same story here. Big down day. You broke out. You had that little box you were in. You broke out of the box off of strength in the U.S. stock market, and that had the opposite effect. Strength on in the stock market, strength in the yen there. So. Dollar yen doesn't enjoy that correlation to the U.S. stock market like it once did. So you're going for the Jan low. There's another one. You're right off that Jan low, and then you're not too far from the historic 80 level also. So again, I probably sound like a broken record, but in my estimation, you're in the process of carving out a long-term bottom here, still in a bear market. Let's look at the U.S. stock market. One more time, we're going to take a look at the dollar index also in the context of worldwide events. You've got, it looks like a certainty of having a leadership change in Egypt, and we're going to cover that briefly. U.S. stock market very, very strong. We called that yesterday. We pointed out how this market has a penchant for when you're in an uptrend, you have big days on the first of the month. Here's one. Here, third of the month there, and then here's the first of the month, first of the month, first of the month. So, powerful trend. Here's another big up day in the first of the month. So, that's just the money flows, 401k money coming in. That's the beauty of asset class markets. You can be fairly certain you're going to get a big bid in there as the pension funds allocate all of our paychecks and our savings, our IRAs, and any automatic deduction out of our paychecks into investments and retirement vehicles. That money all goes into the market as quick as it can. Money managers don't get paid to time it. They get paid to get that money right in there right away. And that's what you saw today, I suspect. So a big up day in the U.S. stock market. Now let's cover the dollar index quickly. It's tough to get a read on how the situation in Egypt is affecting the markets overall. I say it's tough to get a read because anytime there's a danger of something outbreak like that, potential for regime change or war, it has the effect of money flowing into the dollar. Here today you see the opposite. The money came out of the dollar. So there's a tendency to say, well, that's not as serious as a problem as it could be. Well, the money certainly was flowing in the yen. The other two flight to quality markets, the yen and the Swissy. I think you have to take the situation in Egypt pretty seriously. You saw the reaction of in Jordan across the border there, where the leadership there is taking precautions also. So it's a serious situation. That area obviously still has troubles. It's still the most volatile politically speaking, the most volatile region in the world. And obviously there's tensions over there, are a concern for all of us, and they're a concern for the financial markets. So let's not downplay that situation over there. We'll keep an eye on it, and let's not think, just because the dollar sold off, that we don't have to take that situation seriously. The markets are pretty good at weighing risk, and I think today's reaction in the market had much more to do with money flows from into the U.S. 401ks than it did what a lot of analysts are kind of shrugging off the situation in Egypt. I don't think that's the case at all. I think it's pretty serious over there, and we have to monitor that, so we don't want to just shrug that off due to a weak dollar today. I think the Swissies telling the story, and the yen also telling the story that they strengthen off of that. And so I'll be concerned about that. Hey, thank you very much, everybody. My name is Jay Norris. I wrote Mastering the Currency Market. I look forward to sitting with you again tomorrow.